Good morning, dear viewer. Let's have a look at the markets. Let's have a look at the SP500 and BTC. We've got big news coming in today, CPI numbers. Um, that's why that's mostly why I'm trading on my demo account only today. I don't take any trades. I'd rather work on my strategies and avoid markets today because it could be bumpy. So we did get a very big pump over the banking crisis. So my expectation is this, that all of this pump here is, how should I say this? It's maybe not artificially created, but it's the result of banks losing or people losing confidence in banks and probably getting into BTC instead. Um, but we have to keep in mind this is probably just a temporary thing. It's just a one-time event that gave BTC the boost. So what could happen next? I would say, judging by the waves, I would say it's like 1, 2, 3, and then we should get some kind of a 4, maybe a 5. And then correction, this one is to be bought, and then up, and my target, like I mentioned in previous videos, if we go up, then my target would be somewhere here, 28,500. So that's scenario 1. Scenario 2 is the CPI numbers are pretty bad, and then we just cascade down. And what I would be looking out for is if I take the fib retracement and let's get rid of most and only leave, we don't need 16618, we don't need those, we don't need those, we only need 0886. And yep, let's add it here. So we stopped right at 0866. This is a commonly retraced to fib when we get a triangle pattern. So let's get rid of this. So that means that if I get 86% of this wave and then bounce back, then most probably the next retracement will be 886% of this wave here. So then my expectation would be, if I take this fib here, that if we cascade down, because maybe of bad CPI numbers, this would be support. And if this happens, if we get support here, then my expectation is, let's get rid of this, that this becomes some kind of a triangle pattern, symmetrical triangle. And here's where we buy, or where I will buy. So if I get this jagged, or let's say like a W pattern, then, so this is A, B, C, D, and then I get the wave E. It could be pretty short, maybe it only goes down to this level. Then here's the buy, here's the stop loss, and here's the move to the 28,500. Let's see what would be the R and R on this. So long play. Let's have a look. It's 3 to 1. Yeah, 3.2 exactly. So that's pretty good. 3 to 1 seems reasonable, and this is the play I would be looking out for if we get this triangle pattern. And I think this could be driven by bad CPI numbers. So if we drop down, I expect we get some kind of a bounce here, then drop down to get rid of all this nonsense here, of all this void here. And there's hardly any support over there. So if I get rid of this, This is void. Nothing here. No support. Same here. And the first support I see is here. Yeah, there's some here, and there's some here. So we'll see. I mean, it would make perfect sense to have this retraced, all of this, yeah? To liquidate all of those that were panicking during the banking crisis before we go up. Grab all this liquidity and drive, make one more drive up and then distribute here. S&P 500. So I'm looking at this, and what I'm seeing, we are still beneath this big trend line from here over all of these tops to here. Here we caught a little bit of support, again tested this as support, and then we broke down. We are over big support area here, the 3800, but if the support area breaks for any reason, yeah, I'm pretty sure that the algorithms will go into big sell mode, big sell mode. Might not trigger like right away, but that should be that would be for sure coming if this support breaks. And the thing is, we are in a corporate buyback window at the moment. So corporations are set to buy back their shares. So they are quite a big participant in the markets. And on the 16th of March, there's a corporate buyback blackout window. So they will not, or some of these corporations, around about 40% of market participants in this corporate area, will be in this blackout window. So that means they will no longer be buying. So this will take away a chunk of demand for all of these stocks that could propel these propel the S&P 500 even lower. Yeah, or actually it would prevent it from going higher. Let's put it this way. So that's the, it's a short-term, mid-term view, and but still we are still ranging. Yeah, so we are still range bound. This is nothing else than consolidation, and we have to see, you know, if we break down below retest, then we probably go down, go much lower. But if we break these highs here, so we would have to go in like so, retest, go much higher, and this could be our last run for the all-time high, or maybe for some kind of a double top. That's how I see it at the moment. No positions, waiting for the CPI numbers, only trading my demo account, and that's it, waiting. Thank you so much. Have a very, very good day. So long. Bye-bye.